Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what's really going on with these companies, even when they try to bury the bad news under piles of jargon. Today, we're cracking open the latest 10K from Janus International Group, but don't worry, it's not about some ancient Roman god. This Janus makes like doors and stuff, but don't let that fool you. There's some interesting twists and turns here. Did somebody say market risks? We will decipher the heck out of them. Forget the snooze fest that usually is the self-storage biz. Janus International is facing a world of project delays, potential cyber attacks, and some rising debt. Not the kind of stuff you want to store away, right? We'll see how the company is handling all of this. Alright, first things first, a big all heads up. This report contains forward-looking statements, those we hope this happens bits about the future. Turns out their actual results could be materially different. What that means is that they can be super off from what the company expects. In other words, keep the salt shaker handy. Let's dive into some of the main problems facing Janus. They sum it up in the risk factors, basically, things that could really mess with their money. A major thing they highlight is hiring and keeping good people in this industry. It is competitive after all. They also talk about the raw materials like steel coil, which is kinda like the gasoline to their engine. Prices change all the time. They also mention cybersecurity. That nasty world of hacks and data breaches is a real problem for them. Now let's talk dates. This report covers the year that ended December 28, 2024, not December 31st, gotta be different. So who are these guys? Janus International Group makes everything you need for self-storage, like the doors, the hallway systems, and even the fancy electronic locks. They're not just selling parts, they also help design and build self-storage places. They make bits for trucking terminals, too. Think of them as the behind-the-scenes folks who make sure you can safely stash your junk, or those trucking companies can do their jobs. Here are some of their strengths. They serve big REITs, those real estate giants, as well as smaller, like mom-and-pop self-storage businesses. And get this, they are trying to break into the e-commerce businesses. In the mid-part of 2024, they purchased a business called Smith TMC, who are involved in trucking renovation, construction, remodeling, and maintenance. What's most interesting is the why these types of companies have a larger addressable market, and the company believe it's well-positioned for future growth because e-commerce is growing. They face a lot of competition. It's a fragmented market, meaning lots of different players. These are all the local businesses, national, regional, and global providers. They compete based on customer relationships, product quality, how quickly they can get stuff delivered, tech, and of course the price. Let's check on the headcount. They have 1883 employees, not counting the 388 contractors in a wide range of areas. Okay, time for the stuff they are worried about the most. Their continued success depends on hiring, keeping their employees, and all that jazz. If they cannot replace these individuals or create solid plans for the team in the future, the business can be materially affected. Competition, of course, is always a major issue. Pressure on contract prices are common. A loss of market share could have a material adverse impact on the company's financial condition and results of operations. They rely on acquisitions to grow, but buying other companies comes with its own headaches. Actually meshing those businesses together, keeping the important people from the companies they buy, and who knows what hidden problems those companies might have. Like I mentioned earlier, steel is their bloodline. If prices go up or the supply gets cut off, they could be in trouble if they cannot transfer those rising prices to their customers. To mitigate risk, they might use hedging, a kind of insurance for prices. It helps avoid a loss if there is rising prices of steel. Turns out that it can expose them to financial loss. Since they work all over the world, changes in the value of different currencies can really mess with their numbers. The euro or other currencies that are not the US dollar can have an impact on their reported results. Oh boy, here comes the ever-present risk of cyber attacks. If hackers get into their systems, steal data, or shut things down, it could cost them a lot to fix, hurt their reputation, and even lose customers. Here's the thing, people gotta be willing to spend money on storage. A bad economy means less money in people's pockets, so this has a knock-on effect on them. If people don't have the income, they won't spend money on self-storage. Don't expect any money back anytime soon. Stockholders, they say they depend on their business to make profits and to meet their financial obligations. They may not be able to make those future cash flows to pay you back. Being a public company comes with a whole lot of rules and regulations, especially regarding financial reporting. Turns out if they mess that up or cannot report on time, people can lose confidence in the company. Let's see how things really went down in the past year. Opened a distribution center in Toronto, Canada to service Canadian markets and in MT. Erie, North Carolina to support commercial market. Acquired the assets of TMC. Announced a structural cost reduction program. Completed a voluntary pay down of some debt. They bought back a whole bunch of their own stock to help the price out a bit. Alright, numbers time. Their total revenues reached $963.8 million for the year. Net income was $70.4 million. Adjusted EBITDA was $208.50. Their cash flow was good and they have sufficient funds to support the operations. They also say they are on track to pay obligations as required. The company is comprised of Janus North America and Janus International. Their North America business makes up the biggest part of their revenue. They are highly dependent on steel, which is the main raw material. Prices are volatile, which they try to manage. Their management team believes that their disclosure controls and procedures were effective as of December 28, 2024. KPMG, their auditor, gave a thumbs up to their financial statements and also says their internal controls over financial reporting are working well. And what to do with all this? Well, if they ever think the value of goodwill and intangible assets have been overstated, if the long-term plans have not been working out, they would have to write it down and reflect a lower value. Accounting rules change sometimes. If they don't keep up with the rules, that could make problems later. So what's our overall take on Janus International Group? On one hand, Janus has strong market share and its complete offering of services makes it valuable to its customers. But at the same time, the company can be impacted by economic uncertainty. It is highly dependent on external factors such as the price of steel and faces fierce competition. Debt levels, in my opinion, are a manageable concern, but if you are a stockholder, I would keep an eye on sales to see if they can reverse the decline in the self-storage businesses and keep expanding into trucking e-commerce. If you found this breakdown helpful, please hit that like button, leave a comment below, and subscribe for more corporate deep dives. See you in the next one.